the next point. We should ensure whatever we see is clear.
That means work is being done. We can see that it is in opposite direction.
Good day, learners, viewers, and listeners at home. I am Blessing Ayuba Samson. I'm one of your financial accounting teachers. I'm here today to take you a part 2 of branch accounting. The last lesson was on branch accounting, where I defined branch accounting. I gave you pricing method of branch accounting. Today is the third method of branch accounting, which we are starting with the second method, which is at selling price method. Let's start by defining what is selling price method. Goods can also be charged to the branch at the selling price. The price will be fixed by the head office. This method is not good for perishable goods. In our last lesson, I told you when goods are sent on cost pricing, the goods are good for perishable goods or goods that fluctuate in nature. But in the selling price, it is not good for goods that are perishable. The advantage of this method is that the head office can keep an effective check on the stock that has been sent to the branch, and also keep a check on the branch managers, staffs, to ensure that goods sent to them are accounted for. What do we mean by this? That means a selling price method is where the head office sends goods to the branch. They are the ones that fix the prices, and they also do this in order for them to have a check on the stock that have been sent, also to have a check on the managers, that is the branch managers of each of their branches, and also to staff to ensure that goods that they have sent can be accounted for. The head office could maintain the following accounts in respect of the branch. In respect of the branch, head office could maintain these 4 accounts. We have 1, the branch stock account. Number 2, goods sent to branch account. Number 3, total debtors account. Number 4, expenses account. I'm giving you an example on selling price, which is example 2. The other example I gave you is example 1 on cost price method. Kelly and Sons have a head office which acts as a distributing center to their branch office, where all sales are made. All purchases are made by the head office, and goods are charged out of the branch at selling price. All expenses are paid by the head office, with the exception of petty expenses, for which impress is given by the head office. A stock-taking exercise conducted on the branch revealed that actual stock was short by 120 compared with the balance of the stock account. The following particulars extracted from the books prepared by the branch account in the head office books at 31st December 2005 are as follows. Stock at 1st January at the selling price is 40,000. Goods sent to branch is 180,000. Credit sales 98,200. Cash sales 51,500. Goods returned to head office 2,000 naira. Allowances off selling price 1,180. Debtors at 1st January 2005 7,500. Cash received from debtor 96,150. Discount allowed 1,600. Bad debts 1,050 naira. Salaries 6,200. Trade expenses 1,150 naira. Rent 3,250 naira. Petty cash 180 naira. The solution I gave you in our questions that we have 4 books of account to be opened. The first is the branch stock account, which has 2 sides. We have the debit side and the credit side. And the first item on our debit side is the opening stock, which is in our question, which is 40,000 naira. Your branch stock account is going to be opened in this format. And the first item on your debit side of the account is going to be your opening stock, which is 40,000 naira. Then goods sent from the head office is also going to be on the debit side of your account, which is 180,000 naira. Then on the credit side of your branch stock account, we have the credit sales, which is 98,200. Then we have the cash sales, which is 51,500. Goods that have been returned to head office. The goods that we are giving was 180,000, but we have a return of 2,000 naira, which is going to be on the credit side of your account. Allowances of selling price is 1,180 naira. Differences in stock, which is in your question, is 120 naira. When looking at this account, our balance on stock is 67 naira. But how did we get that 67,000 naira? If you compare the debit side with the credit side, you can see that the debit side is greater than the credit side, which is 220,000 naira. You will now deduct the difference from this angle to 120. The difference between the debit side and the credit side is your balance of stock, which is 67,000 naira. Then we have the branch total debtor account. In this account, we had debtors. And on your debit side, we have the balance brought forward of 7,500, which was the initial payment by the debtors. The cash received from debtors is on your credit side, which is 96,150 naira. Then we gave them discount, which is always going to be on the credit side of your accounts. And the discount that was allowed to the debtors is 1,600. Then we have bad debts, which cannot be recovered from the debtors, which is 1,050 naira. On our debit side, I said earlier on, balance brought forward is 7,500. Then credit sales were made, which is 98,200 naira. That is the amount that was collected by the debtors. And at the end of this account, you can see that we have a balance. Where the debit side is greater than the credit side, we have a deduction. And the balance to be paid by the debtors at the end of the period is 6,900. What they collected is 98,200, and they paid off 7,500. And this is our balance, which is 105,700. Goods sent to branch account. The goods that are sent to the branch account is going to go in this format. On our debit side, goods returned from the branch will be on your debit side, which is 2,000 naira. Then the allowances of selling price. We gave them some allowances of their selling price, which is 1,180 naira. We have a difference in stock, which is also coming on the debit side, which is 120 naira. Transfer to sales account, 119,700. On this side of our account, which is the credit side, balance stock brought forward. In our question, we said we have some balances from our trial balance, which is 40,000 naira. The goods to the branch, after all the deduction, at the end of the account, we have 150,000. If you look at this account, you can see that this side is greater than the credit side. The credit side is greater than the debit side. So we have a difference which should be transferred to the sales account. And our difference is 19,700. This is our difference. If you calculate all, you have to have a complete figure of 190,000. And on the third pricing method is the cost plus a percentage method. At cost plus a percentage method is the third method of branch accounting. This method is the most effective method of charging goods to the branch. It is reliable because it checks upon the cash and the stock at the branch. And it also gives the head office the gross and the net profit. The transactions is so transparent in this method. Then we have accounting entries. The accounting entries for this method is two. We have two methods of accounting entry, two basic methods, which is one, double column method, which is otherwise known as memorandum method. It is also a memorandum column method. Then we have the other method, which is branch adjustment method. The double column method is just like your cash book, your two-column cash book method. Under this system, there is no need for separate branch stock accounts and the branch adjustments account. There is no need for this because the two accounts can be combined into two to make a memorandum or a double column account. The branch stock will be ruled with two columns. One column for record transactions at cost and the other column at invoiced price. The entries in the invoice price doesn't form any part of the double entry. It doesn't form any part of the memorandum column entry. It is only used for the checking of stock. The invoice price method is used for the checking of stock. The invoice column must be balanced, except where we have stock deficiency. What do you mean by deficiency? When goods are stolen, when goods are still on transit, and when there is no proper accountability of goods. Now, we are going to take example 3 on the cost plus a percentage method. Suzuki Enterprises operates a head office in Lagos and a branch in Ibadan. All goods are purchased by the head office and sent to Ibadan at cost plus 25%. The following information we are given in the year 31st December 2016. Goods sent to the branch at cost, 50,000 naira. Sales on credit, 35,000 naira. Return to the head office at cost, 500 naira. Cash takings remitted to head office, 10,000 naira. Stock at cost. Stock at the cost is at the cost at the end of the business. The stock is 12,500. Cash takings stolen, 150 naira. Sundry expenses paid out of takings, 950 naira. Goods stolen at cost, 40 naira. Allowances of selling price, 100 naira. In this question, any figure that has at cost has to be changed to the selling price. That is why, my students, you must have a good knowledge of markup and makeup. You are required to prepare 1. A branch account in the head office books, including all the necessary accounts. Then you prepare the profit and loss account for the year. I told you that our memorandum account is used to prepare a profit and loss account in order for us to determine whether we have made a gross profit or we have made a net profit. Now, this is our solution. The system of accounting the head office uses in this question is the memorandum column method. And the step 1 is to calculate the selling price, invoice price. Selling price in brackets is the invoice price. I told you that any question that has an attachment of a cost price has to be changed to the selling price by using up our markup. And the markup figure given to us is 25% on costs. Now, selling price of goods sent to the branch. This is the formula of markup. Profit equals to markup times cost price. And our profit is going to be changed like this, 25 over 100. What has been sent to the branch is 50,000 worth of stock. We will now say 25 over 100 times 50,000, which is equals to 12,500. And our selling price is equals to cost price plus profit. Our cost price is 50,000 naira plus the profit that was calculated, which is 12,500. Then the selling price of returns to head office. Our returns to head office. Profit equals to markup times cost price. the same formula that was used in the first question. 25 over 100 times 500, that is the returns, which is equals to 125 naira. We have 500, which is our returns, plus the profit, which is 125. It will give us 625. And this amount will go to your invoice price. Selling price of stock to close. Markup times cost price. 25 over 100 times stock at close is 12,500, which is 3,125. Our stock at close is 12,500 plus our profit, which is 3,125, which will give us 15,625 naira. Selling price of goods stolen. Markup times cost price. The same formula. 25 over 100. And goods stolen, the amount is 40 naira. If you calculate 25 over 100 times 40, you will have 10 naira. 40 plus 10 will give us 50 naira. Now, these are our memorandum branch accounts. When you are given a markup, you have to calculate that before you can go on to open up your memorandum branch account. In our memorandum branch account, you can see that it resembles the two-column cash book, where we have two columns. Here, at the empty column, where there's no heading, is the details of transaction. The two columns, we have the invoice price and we have the cost price. On the credit side of your account, you also have the invoice price and the cost price. The amount to be fixed on the invoice price is the calculation that you have made when it comes to the markup. The calculation that was made in our previous example, 25 over 100 times goods sent was 62,500. It will be under your invoice price. Then the cost price is 50,000 naira, which will be brought under cost price on your debit side. When we come to the credit side of the account, returns to head office was calculated using our markup, and we have 625 naira. The cost price is 500 naira. Credit sales, there was no markup. There was no calculation on that. Pick the figure, put it under the invoice price, which is 35,000 naira, on the cost price, 35,000 naira. Then we have cash remitted. There was no calculation. 10,000 naira was your cash remitted. It will go under your invoice price. Then the cost price, 10,000 naira. When we go to the debit side of our account, this is to determine whether this trading has made gross profit or has made gross loss. And as you can see, we have made a gross profit. How do we determine our gross profit? By calculating the cost price. 500 naira, 35,000 naira, 10,000 naira. Then on this side, you can see cash taking is a conclusion of what we have taught you. Cash taking stolen has an invoice price of 150, a cost price of 150. Sundry expenses has a cost price of 950, so the invoice price is also 950. Goods stolen has a cost price, which is changed to the selling price. And when we changed it, we had invoice price is 50 naira, while the cost price on goods stolen is 40 naira. Allowances for selling price is 100 naira. It is always coming under the invoice price because it's an allowance. Then we have, at the end of this, we have a gross profit, which is 12,500. If you look at the other side of the account, you can see that it is higher than this side. So there's a gross profit. Anytime your credit side is lower than your debit side, you have made a gross profit. And this is the balance of our account. Goods sent to branch account on the cost price is a T account where the goods sent is 50,000 naira on your credit side. Returns to head office is 500. You are taking every figure on the cost price. We are not doing any calculation on this. You are going to take every figure on the cost price. You pick according to your trial balance. On your credit side, branch stock account is 50,000 naira. Returns to head office is 500 naira. Then the difference, you can see that they sent the goods of 50,000 naira stock. The difference between, and they returned 500, which is on your debit side. The difference between 50,000 naira and 500 is 49,500, which is going to be transferred to your head office trading accounts. And our balance will be covered with 50,000 naira. Now, this is our profit and loss account. Our profit and loss account is to determine whether our account has made a net profit or a net loss. Our profit and loss account, you are going to carry the gross profit from the previous account, memorandum account. You're always bringing back, you bring back your gross profit to the credit side of a profit and loss account. Your gross profit is to be brought forward, taken from any trading account to your profit and loss account. And this gross profit that we had in our memorandum account is 9,140 naira. And all the expenses is going to be on your debit side. And in this account, we made expenses as number one, sundry expenses, which is 950 naira. Cash stolen cannot be accounted for, so it's an expenses, 150 naira. Goods stolen at cost is also an expenses, which is 40 naira. Looking at this account, you can see that the gross profit is greater than your debit side of the account. And when we have the credit side, anytime the credit side is greater than the debit side, we have profits. So if you deduct 9,140 from 950, 150 naira, 40 naira, the balance that you have is 8,000 naira. And that balance is our net profits. With this, I have come to the end of my lesson. I have taught you the definition. In our previous lesson, I told you what is the definition of branch accounting. I gave you the divisions of branch accounting. We discussed the pricing method, which are 3 pricing methods used to calculate branch accounting. We have the cost pricing method, the selling pricing method, and we have the cost at percentage pricing method. In our first lesson, I calculated the cost price method, and today you can see that we calculated the selling price method and the percentage price method. Before I leave you, I'm giving you this assignment. I hope most of you have this textbook. You have this textbook, or you can Google on this textbook, which is Essential Financial Accounting for Senior Secondary School by O.A. Longi and R.A. Kasim. Check on page 366, question 35.4. When you are done with this assignment, you can send it to my number, which is 081-8269-2515. I'll repeat my number again, 081-8269-2515. I remain Blessing Ayuba Samson. Stay home, stay safe, and keep learning. Thank you for listening and also viewing.